Welcome to this update on the Baillie Gifford Multi-Asset Income Strategy. We're marking the third anniversary of the fund's launch, and I'm joined by the two lead managers of the strategy, Stephen Hay and James Dow. The fund has two clear objectives: to deliver an attractive and resilient monthly income whilst preserving the value of capital and income in line with inflation. We do that by investing globally in a range of 9 different asset classes which we believe can provide great income. Because of the focus on resilience of income, we think that this could be a core solution for those clients who are looking for a steady and repeatable monthly income in retirement. Now, the last 18 months have certainly been unprecedented in modern times. It's been a very interesting period to be running a relatively new investment strategy. So let me turn to the fund's managers. Stephen, what have your main reflections been over the last 3 years?
Well, Jan, I think of the last 3 years as being an incredible real-life stress test of our approach. The COVID pandemic has been a very challenging period for most income investors. And I'm delighted that over that period, our income and capital have proven resilient. It's a real validation of our approach, if you like. Now, inevitably in 2020, there was a small decline in our income, but the variation was kept within the guidance that we gave clients when we started the fund. And it's a good result relative to the wider market. And it's also forecast to grow nicely this year. Also, throughout the period, our capital has grown well ahead of inflation. Doing a great job in capital is really important because it's growing the capital that allows us to pay a growing stream of income that is ahead of inflation over the long term.
Thanks for that. Let me bring you in, James. What do you feel you've learned over this same period?
I think the main lesson that we've learned is the value of careful bottom-up stock and bond selection. Diversification is helpful to investors, but only up to a point. What we've been reminded of through the COVID-19 pandemic is that in periods of extreme economic stress, lots of correlations come together at the same time, investments come under pressure at the same time. So what's vitally important is to make sure that as a manager, you've picked those individually strong companies and borrowers who can get through such tough times well. And that is what we've seen with it across the fund. We've not been perfect through COVID-19. We have, for example, had a few property investments where the dividends haven't proven as resilient as we had hoped. But by and large, we have seen that resilience shine through. Our infrastructure investments, for example, we have not had a single dividend cut. Across our equities, very few dividend cuts. Not a single default in our corporate and sovereign bonds. That bottom-up resilience is ultimately what has underpinned the resilience of the income from the portfolio. It also plays to our strengths at Baillie Gifford, being bottom-up stock pickers. So the lesson that we'll take forward from that is to keep focusing on that strength, keep focusing on stock selection and bottom-up resilience.
Thanks a lot for that summary of what has happened, but let's look to the future. What sort of challenges are you anticipating?
Well, our priority always is to deliver on our long-term objectives, and as you know, one of our core objectives is to make sure that the fund's income and capital grow in line with inflation. The challenge there, potentially, is that we could be entering a period where inflation accelerates for an extended period of time. Now, we have several tools at our disposal to cope with that, with stocks, with asset allocation, and recently we've been allocating more to real asset classes, equities, infrastructure, property. We've recently made more additions to commodity-related companies, for example, which all should position the fund well for a period of rising inflation. But that's the challenge. We do think we have the right portfolio for it, but it's certainly something that we need to keep monitoring in the months ahead.
Thanks for that. Back to you, Stephen. What do you feel most excited about when it comes to managing this strategy?
Well, I'm really pleased that the world is now taking seriously climate risks. And from a portfolio perspective, that presents an opportunity in infrastructure. So we expect a sustained investment in the essential infrastructure that we need to support this green energy revolution. And for an income-seeking investor, infrastructure has some nice characteristics. It's got a high yield and the potential for capital growth. So having an approach that is set up to pick the best income-paying securities from a broad global opportunity set gives us the best chance to produce a reliable, growing stream of income for our clients. And ultimately, that's what excites me.
Thanks very much to both of you. We do think that this is an incredibly exciting time to be actual income investors. We think there are great times ahead from which to be able to deliver robust and repeatable income from a variety of investment sources.